Well, they say the market climbs a wall of worry, and clearly that's been the case over the past while, because with all the noise out there, markets have picked up on optimism related to the potential for a US-China Phase 1 trade agreement. And most major equity markets, the US, Canada, the Eurozone, Japan, have been up sharply. They've been up sharply as a result of the following. Firstly, optimism on a US-China trade deal. Secondly, central bank support. Thirdly, a very strong US jobs market with wage growth and rising real incomes. And lastly, a lack of alternatives. It really is a TINA market, and that is, there is no alternative to equities. One thing we can say is it'll be interesting. What we've seen over the last while is with every tweet from the president, the markets are provided with direction, either good or bad. For equity investors, a divided government where we have checks and balances through a sharing of the balance of power on Capitol Hill has historically been a good environment for equity investors. Back to politics, policy, and the economy. The election's over. Focus on the economy. It's the best of times, worst of times for the Canadian economy. We have a tailwind in terms of the employment market. A bit choppy, but we've generally had some good job gains. And the other side to that positive story is we've had positive hourly earnings growth here in Canada. So the average Canadian is seeing their wages rise. In fact, it's exceeded growth for the U.S. labor. So that's a positive. The negative is we still, in terms of business conditions, have some headwinds. In particular, capital expenditures, business spending has been affected certainly by in Western Canada challenges in getting the all-important commodity for us here in Canada, oil, to its export markets. So that will be a challenge. We will get decent growth, but not strong growth here in Canada. Certainly a recession is not likely in the cards. For the Bank of Canada, we'll have support. We may get a 25 basis point rate cut, which means interest rates generally here in Canada will be relatively flat. We've talked a little bit about the global economy and global economic recession. Let's talk about policy, because over the next 12 months, there are many things going on. First off, let's talk about successions at central banks. We know that Mark Carney will be leaving his post at the Bank of England, so we'll have a new regime in terms of leadership for the all-important Bank of England. We also know it's just been announced that Stephen Poloz will step down as the head of the Bank of Canada. So these are important posts, and it's important for us to, beyond the U.S. presidential election, to be aware of that. The second is a transition from central bank policy from where we've been. We've seen the mid-cycle adjustment by the Fed with ratcheting over the Fed funds rate by 75 basis points, and now we're in the pause phase. The question is, where do we go from here? And that'll be interesting for us to get a sense for. We're hearing that there is the chance that we will see stimulus in Germany in reaction to weak industrial production, in particular auto production in Germany, to see how that plays out. And then obviously, we want to see what happens closer to home in the U.S. in terms of the potential during the election year of some further stimulus from the Trump administration.